excited to be here and speaking to this fantastic group of 4 leaders from the investment and finance space today. These 4 leaders who have been investing in various emerging markets as well as in the Asia region. And today they'll be sharing their perspectives and insights on gender lens investment. We'll start with a quick round robin on each of your interest in GLI and where it fits or does not fit in the context of your work. So perhaps Genevieve, I'd love to start with you. Could you talk about the value that you saw that you wanted to create as an investor, and also, how did you end up on this road to gender lens investing? Was that a natural sort of fit? Or a motivation, or was that something that you happened to chance upon?
Okay, so first and foremost, can you hear me? Okay, so my journey into gender lens, very honestly, it was not it was not a journey that was based on the fact this is what gender lens investing is. We want to get it. We got into it just by circumstance. So my colleague and I, 2 women, decided that we wanted to invest in Myanmar because we saw the opportunity in Myanmar as a place with great resources, geopolitically and very strategic location, demographic dividend, all the good stuff. And we said, okay, let's go there. It's a frontier economy. We will invest in small and medium-sized enterprises, and we want to support development. So that was really the genesis of why we did it. Because we were 2 women, we were going there. What we found was that when we spoke to companies, we found that women were actually quite interested to speak to us because we had actually started a business in Myanmar, and we had gone through some of the team. So as a result, they sort of said, you kind of understand what we're going through. And so they started to talk to us, and we made investments in companies where women. So I had to say that it wasn't because of that. But having gone through that journey, and I was involved in the APPM GLI fellowship program, understanding the frameworks, then I started to see where we fit it in. So if I look at all the frameworks, we have investment capital, that's what we did. Whilst we were never truly sort of saying we have a hard target, we always had a soft target. And I'm very proud to say that the 4 investments we made in the fund, all of them have either shareholders who are women or they have senior management who are women. So we met the criteria, but I don't think it was really because we went out there and said, we are women, we want to invest in it. But the philosophy of working with them led to this result.
Thank you. Thanks, Genevieve. And with that, I'm going to turn over to Amy at IFC. And I know that IFC is a limited partner as an investor in Anthem, Genevieve's fund. So very curious to hear, Amy, from you, where GLI fits in the mandate that IFC runs as an investor into fund managers as well.
Yeah, for sure. So in terms of our origin story with gender lens investing, as IFC is part of the World Bank Group, we are always looking to have impact, have development impact where we invest. And that includes progressing gender equality. At the same time, we always must have a return, a financial return. So before we got into gender lens investing per se, we did some research about that financial return question. And so a few years ago, and many of you might be familiar with it, we did a large-scale study looking at private equity and venture capital in emerging markets and what difference gender balance in the funds and in portfolio companies was making to the returns to those funds. And we found very positive results, actually. And I think probably that's been discussed with this group or will be, and certainly you can read it. But we're looking at 20 to 20% higher returns when you have a gender balanced investment committee and senior investment teams. So that gave IFC kind of the clear mandate to really put our weight behind some gender lens investing. And our internal process for how we do that was something that, of course, we turned attention to and worked out that we can, of course, choose to invest in funds that are investing in women, founded businesses or women-led businesses, but there's a whole variety of other things that we can do, which I'm sure we'll get into, and I'm sure is kind of the point of this whole fellowship program. But for us, it was really a matter of sticking with our overall mandate to have development impact, and we see our gender equality work within that mandate, but our also equal need to have a financial return. So did the work, found these both match up, and then we go for it. So, we choose Anthem Fund and others because it's a great fund and it's doing great work and it's making, good business decisions and contributing to development outcomes that we want to see. And that includes, investing in women and supporting gender diverse firms.
Thanks, Amy. That makes sense, and I think we'll come back to this and talking about how GPs and LPs may have a difference in perception around GLI, but we'll come back to that. For now, I'm going to move to you, Yumiko-san. You talked about. I remember you mentioned about the unique positioning that Empower has as a Japanese VC fund, and you also talked about how there was no intention to build it as a GLI fund, but you're starting to see some benefits around that. So, curious, why don't you share your journey with us? And, really curious to hear about where you see gender fitting in with the risk return mandate that your fund has.
Yes. So first of all, thank you so much for having me in this very important discussion. So as mentioned earlier, we launched this fund in May of 21, Empower Partners. And this fund was and still is the first and the only female-led venture capital fund in Japan. We actually global fund, meaning we invest in companies in many countries. But because we're based in Japan, we invest roughly 70% of capital in Japanese startups. So it's similar to the story that Genevieve shared with us earlier. Myself and two other partners are women. So 3 women, we got together and decided to launch Japan's first female-led venture capital fund a year and a half ago. It was not an intentional act on our part. We did not set out saying, okay, we're going to be the first female venture capital fund. We just happened to be women. 3 of us have spent almost 2 decades in financial industries in different roles, but mostly with the large investment banks such as Morgan Stanley and Goldman Sachs. We had 0 track record when it comes to venture capital investing. However, what we knew really well, based on our experience in the financial sector, was that the so-called ESG elements, whether we're talking about gender or, we could just talk about the environmental aspects or governance, these factors, which used to be considered almost non-financial, almost, quite frankly, they kind of looked at these elements thinking, oh, we want to check these boxes. We are social impact funds. We got to do the right thing for the society. And quite frankly, we actually have known that these factors are actually very much material elements when it comes to financial returns, just based on our public equity investments. We wanted to bring that idea to the venture capital investments in terms of how we look at ESG elements, whether again, gender or otherwise. We are looking at these elements as very much enhancing elements to financial returns. So we did not set up this fund thinking we're going to be very much focused on just gender or ESG. We wanted to focus on financial returns. And we realized, hey, these ESG factors, they are very much, very, very important elements. If you're going to try to achieve the, competitive financial returns, then you have to take into considerations that these factors are reflected in the decision-making process, as well as value adds elements that we would like to bring to the table when it comes to portfolio companies. So anyway, that's how we started a year and a half ago. And therefore, we do not have gender balance requirements. We don't have, X percentage of our portfolio companies would have to be gender balanced, or none of that. What's interesting, it's been a year and a half, is half of our capital is invested in minority founders, women founders. Again, without having a specific sort of goal, so to speak. We do not have mandate in terms of how much capital has to be invested into female-run companies. What has happened is we have always chosen the most promising companies in terms of financial returns. We actually happen to have half of portfolio companies run by female entrepreneurs. They are still very much, in our mind, the most promising companies in terms of financial returns. So what I think is happening, but that's not what you see, right? If you look at the general landscape of venture capital funds, you don't see a lot of female run companies. And why is that? Why do we have 50% of a portfolio companies run by women? And why don't we see that in other funds? I think part of the, I guess, answer, the hint is, where do you look when it comes to deal sourcing? We actually happen to have very rich deal sourcing situation when it comes to minority founders. And that's partially because I would think female founders, they look to us and say, oh, that Empower Partners fund is run by women. Perhaps they see the value adds that we can bring to the table as a founder because they see maybe the similar scenario, similar landscape, or they see the same value sets. And I think that helps us in terms of securing really good, interesting, flow of companies, which happen to be run by women. And quite frankly, they don't have to be run by women. They can be run by anybody. But because we tend to attract female founders, we actually get to see more opportunities than, say, our rival companies. So we think that's a huge advantage. Just being female-led fund, at least in the context of Japan. I would imagine it's similar in other countries, but Japan is in particular a very much male-dominant society or economy, and therefore we kind of stand out, and that's a huge advantage. So I would think this is something that other people, whether they're LPs or other VCs, they will eventually catch on. They will realize, oh, that's a huge advantage. You can attract much wider range of potential investment opportunities. So hopefully we will not stay as the only female-led venture capital fund in Japan for a long time. I'm really praying, I'm really hoping there will be a lot of other funds who realize this is a huge opportunity. It's basically half the population. So I'm hoping. It's been only a year and a half since we've launched the fund, and we're still the only one, pretty much, in this scale. But I hope that would change very soon.
Thanks, Yumiko. I'm going to move to Evie, who we haven't had a chance to speak to yet. Welcome, Evie. I would love to hear from you on, Astia, as I understand, has a pretty strong and stated GLI mandate, but would love to hear how did that come about, and what's your experience been so far in working with a fund structure that invests in women-led businesses?
Sure. Well, thank you for the invitation. I'm Evie Mulberry, one of the managing partners at Astia. I'm based in the UK, but Astia is headquartered in the US, and we invest from a family of funds exclusively into women-led companies that solve global problems. So and we look at global deal flow, but very similarly, 75% of our capital has been deployed in the US. And we've been investing ourselves for the last 10 years, but have been around for 20 years. And we've deployed $40 million into 63 companies, all women-led, and have had 19 exits. So very much focused on financial performance and financial returns, but we have the value that we believe that in women as leaders. And for Astia, in terms of the origination story, I'll do one for Astia and one personally in terms of the focus on gender lens investing. At Astia, we were set up in 1998 by Catherine Muther, who's the CMO, who was the CMO of Cisco at the time it went public. And she looked around the boardroom when they were celebrating their IPO and realized that she was one of very few women in her position, despite there being ample experience in her peers. And then she looked at peer companies as well and recognized the same problem. So back in 1998, she set up Astia, and we have been around 20 years and have never wavered from that commitment to level the investment playing field for women. We've had different ways of executing on that commitment. We are one of the first physical incubators in San Francisco working with companies. We've switched to more of an accelerator type model, working with women-led companies delivering programs in San Francisco, New York, and London. And then for the last 10 years, because the venture capital ecosystem has not figured out how to invest in women-led companies, we launched investment activity ourselves, despite being a not-for-profit. In 2013. So we've been investing for the last 10 years exclusively into those women-led companies, and that's that $40 million deployed. And personally, I've been at Astia for 15 years, but prior to Astia, I was a finance lawyer, as you mentioned. I worked in private practice, but also at Barclays Capital Investment Bank. And you know, the majority of the deals I worked on, and I worked on a lot, I was the only woman around the deal table negotiating those deals, whether it's the legal teams, the banking teams, the management teams, the accounting teams. And I really wanted to change that. So when I met the CEO of Astia, Sharon Vosmek, back in 2008, I saw an ideal chance for me personally to be able to get into gender lens, sorry, can't even say the words of the topic that we're talking about, gender lens investing. So I could bring all the experience I had through being a lawyer, but we was able to execute that in a values-based organization, and hence being here 15 years later. And I'm really looking forward to the conversation today. Thank you for the invitation.
Thanks, Evie. And really fascinating. I mean, you talked about, I think you referred to the ecosystem level challenges, and that always keeps coming up in context, especially of deal flow, that we just don't see enough. We see fund managers complaining that, well, we can't invest in enough women-led businesses because they aren't enough, or we don't find enough. I just want you to sort of talk to that as well. And you talked about how you've built an accelerator type model around it. But when you're raising your fund and you're speaking and you're negotiating with new LPs that you're bringing on board, how do you convince them that this model is going to work, aside from like the pure play investing, and how do you ensure that the fund structure actually accommodates for this? Because I'm assuming it may not necessarily be something that the fund structure traditionally can take up, the accelerator type activity. So how do you balance those two things?
So the accelerator model we left behind in 2012 when we started investing. We don't do that anymore. And I actually, where I sit at Astia and have done for the last 15 years, our challenge has never been around deal flow. I think there are ample extraordinary women to invest in around the world. I just don't see it. I think some of the points that were raised in the previous introductions talk to it, that if you have a stake in the ground, that you are investing in women-led companies, other entrepreneurs can see themselves in your portfolio. I think it really attracts others. Success kind of, or investing patterns breed deal flow. And I think as we see over 1,300 companies every year that obviously we're not going to invest in them all. And obviously they're not all ready for investment at that point. Last year, it was, $3 billion worth of investment opportunity came through our sourcing and screening mechanism. So I really disagree that the deal flow is the challenge. I think what is the challenge is the allocation of capital that goes to the companies that are out there. And I'd love if all of us were deeply committed to changing that. And I think the fact that we're all here today talking about it, and both the fellows, but also the fellow panelists here this morning, I think, or this afternoon, depending on where you are, I think it's really important, because I do think those exceptional women are there. leading exceptional, innovative companies, not just in the cliched areas of, I don't know, fashion or beauty that they often get pigeonholed in. They're exceptional scientists, they're exceptional data scientists that we can be investing in. And I just think you need to be very bold. At Astia, we spent 20 years creating the deal sourcing and screening mechanism that we use that eliminates bias through the process, and that is real stake in the ground that we value women as leaders. And I think there are many things we can all do as investors to make sure that we are seeing and having our eyes open, because I don't think the problem lies in the women entrepreneurs. I don't think we need to change or fix women. I don't think we need to mentor them anymore. We need to be investing. And as a venture, I know that we're not all venture VC funds, but as venture capital investors, we need to be better at changing the ecosystem so that our deal flow mechanisms are open to seeing more companies. Sorry, you touched, as you could probably tell, you touched on a sore subject for me. And I really think we need to dispel the myth that there aren't exceptional women out there to be investing in right now today.
Yeah, thanks.
I will stop there. Otherwise, I will.
Yeah, I'm going to take that point to Genevieve, because Genevieve, Anthem is obviously investing in a geography where we haven't over the decades seen enough investments going to women-led businesses or women-owned businesses. Tell us about what you're doing differently in terms of attracting that deal flow that you are, or making sure that you're building that value for women-led businesses, but also businesses that are impacting women directly.
So I think one thing that we did was that we always hired as diverse as possible. And we attracted a lot of women. So our team actually had a lot of women in it. And once you have women on the team, they have their own networks. They go out. So, for example, one of the staff that I used to have was actually a person who came from a family that ran pawn shops. And they were starting chickpea farms or chickpea processing. So from there, she actually knew a whole slew of people who were in that industry. And you can already immediately see the benefits of having your staff getting deals from you. So as I said earlier, and very much like what Anita said as well, if you're a woman and you show that you actually understand what's going on, you attract people. You're a natural attractor because people want to work with you. They see you as the trendsetter, trailblazers. Now, other things that we've done are what most people would do. You go out and meet with the various women's associations. You hold, roundtables. You hold networking events, and we would fly off to various parts of the country and attend startup competitions. We'd volunteer to judge at business plan competitions. And yes, there are a lot of capable women. The challenge we find is that very often they don't know how to access the investors. So what we found is that you need to actually match the investor and investee. And if you just stay for us within Yangon, you're losing the opportunity to meet a lot of entrepreneurs who are outside the key cities of Yangon and Mandalay in Myanmar. So for us, use the network of our staff, use the network of the companies we've invested in, especially those who are women, because women are very good in promoting. One thing I like to say is women will support women because there's so few of us, right? We need to support each other in order to move the barrier, move the goalpost. And so we leverage on the women network. And at the same time also, when we can, we look for men who have daughters because we say to them, one day your daughters will inherit your business. So help us meet that need. So that's what we're doing.
Thanks, Genevieve. And I think I'm going to come back to you, Yumiko, because I wanted to double click on the deal flow bit that you talked about. But also, I think in addition to that, the other question I wanted to ask you was, the integration that you talked about with ESG and how you've been, you sort of look at your portfolio from an ESG lens, and that's what you're using, but you're also seeing sort of the natural overlaps between ESG and GLI. So maybe can you talk about that as well, in addition to the deal flow?
Sure. So the sort of basic approach that we have decided to adopt is to integrate ESG elements into the selection process, when we look at companies, when we go through the whole DD process, as well as the value add side of things. So once we have invested in companies, we do quite a bit of work, really hands-on work, trying to help the portfolio companies integrate ESG elements into their growth strategies. So the two elements: one, we definitely look at ESG elements when we choose companies to invest, and two, once we have invested in those companies, we literally spend quite a bit of time with them, making sure that they have every help they need from us in terms of integrating ESG into their core business models. When we look at the ESG elements, as I said earlier, they are very much directly linked to the enhancement of corporate value in economic sense. So they tend to be, well, at least in the past, people would look at ESG an approach and say, "Oh, that's a CSR," but we would just argue, no, this is a very much value creation in economic terms. So the gender element is very much a very important part of the ESG approach, especially in the context of innovation. We have quite a bit of evidence. I'm sure many of you have seen different types of research, which actually has a very strong evidence in terms of how innovation can be or is enhanced by having diverse, players, whether they are the entire companies or management teams, decision-making process. So that's a very clear economic case. So when it comes to the gender approach, we very much think of gender as an innovation creation, machine. So within the ESG element, again, there are so many different ESG elements. Gender plays such an important role because, again, we can't really look for companies without having innovative mind in the company's management teams. So that's exactly what we are seeing in terms of how these gender approach and ESG approach is completely overlapping and completely interlinked. And that is a very direct value creation as far as we're concerned. Wanted to also mention something, I think as Eve, you mentioned, deal flow is not a problem. There are plenty of female, founders, and that's exactly what we find as well. In terms of capital raise, we actually find it very interesting that again, in the context of Japan, it's all male. I just don't see any female LPs. Male LPs are dying to look for people like us because they don't see anywhere else. They're really dying to find people who can take their money and allocate to the most promising entrepreneurs out there. Whether they are female or male in terms of entrepreneurs, as long as they give you competitive financial returns, maybe they don't care. But they realize if they do that only through male lens approach, they realize they're missing out so many incredible opportunities. So what we found out when we started to do fundraising, this again 2 years ago, 3 women, we went to these meetings. The first reaction was, "Oh my God, they're all women. Never happened before." And I actually do think this is a great opportunity for us here, if we are raising funds, to let them know that we exist. Come on, well, look, we exist. And, tell them that they should do a better job looking for female venture capitalists. And I do think that, like I said, we really don't want to be the only one. We are setting, sort of the first example. There are going to be more in the future, but I think it's important that we raise our voice. There are going to be female venture capitalists who actually can do a good job for them to deploy their capital and find great opportunities for them. So I think it is a great time for us to do that.
Thanks, Yumiko. I think, Amy, I wanted to touch upon the whole sort of difference in perception we were talking about when we were discussing this panel, between the LPs and GPs. And I think linked to that is my question around, understanding that when you are an LP in a fund where you have other LPs that may not have the same sort of GLI mandate that you have, how do you make them come on common ground? How do you have them meet you on that common ground? And how important is what's the kind of role a fund manager plays in making sure that the LPs are aligned on something like basic gender metrics, for example?
No, thank you for that question. In terms of other LPs, so certainly when we are co-investing in a fund, our relationship, of course, at the beginning is pretty bilateral, and we might not necessarily know what's happening with the other LPs and what kind of questions they're asking. We usually hear about it from the GP if they're being asked similar or not similar questions, and then sometimes they'll even say, "Can you please align on all of these questions you're asking us?" And then we're very happy to do so. And what we have found in the deals that I'm in, I think it's more common that we find other LPs asking similar questions, and we're kind of coming in behind them or with them to ask the questions on gender than it is for them to be ignoring. I think because I wouldn't be involved if they're really recalcitrant, then they're not involving the gender person, right? So what I see more often is a GP that we are considering that might be a little bit resistant on gender, and not just investing in women-led firms, but a range of gender factors that we might take into account. And then we know of co-investors, or they tell us of co-investors, and we talk to them about, I'm sure, a range of things, including gender, and find that if we go together with the GP, we're a lot more powerful. Or if we're first, we start asking the questions, we go into the fund anyway, even if we haven't maybe gotten everything we wanted on the gender front, and the next LP goes in, and because they're asking the same questions, they're getting the influence. And eventually, the GP is worn down, I guess, by this, or convinced, rather. I mean, we do think we have a very strong case, of course, and we're not just doing this to harangue people. The other thing that I found interesting about this perception between what LPs think they're asking about and what GPs hear, that came out of our research was when we asked LPs, how much do you care about gender in your allocation of capital decisions? They said 65%. So this is the top concern, or one of the top concerns, 65%. And this was in 2019. When we talk to GPs about this, do you think your LPs are concerned about gender? Maybe a quarter. They really, the LPs thought they were being more, I guess, proactive on it, or expressing a preference, or maybe just having a preference, but maybe not even thinking they were expressing it well. Certainly far more than the GPs were hearing that. I'd be very curious if that's changing now, 4 years later. But at the time, that gap in what GPs thought they were communicating, or what LPs thought they were communicating, and what GPs were hearing from LPs on gender was quite interesting.
Thanks. Yeah, very, very interesting. And I wonder, I'm going to leave this as an open question. If Yumiko, Genevieve, Evie, you want to react to this, do you, as your in your own fundraising journey, or as you're dealing with different LPs on your funds, do you see that challenge around managing expectations or aligning them on, especially on things around gender or gender lens investment?
At least in the context of Japan, it's really the last couple of years when they started to feel pressure from the capital markets in terms of sort of applying the ESG principles to every asset class. So it's been happening already in the public equity marketplace, right? They a lot of them actually are adhering to the ESG principles, and they have launched a number of ESG funds in the public marketplace. I think it's really the last maybe year or two when I think a lot of these institutional investors, at least the ones that we speak to on the LP side, they started to really care about all asset classes. The reality is in the alternative asset class, there's still very little. There's still very little in terms of actual implementation of ESG practices or gender sort of approach. But I do think there is more pressure now that it's been pretty much well accepted in the public equity capital markets. And I think now there is quite a bit of a question mark. And so are you doing this only in this particular asset class, or are you doing this in all asset classes? And I do think that's a great sort of trend for us, because I do think that the LPs are realizing that, they can say, oh, we're doing this for public investment, public equity investment, but not doing this in alternative or, VC or PE space. I think that's started to change.
So my perspective is this: when we look at funds, right, as all of you have said, it's an evolution. And ESG took a while to really start kicking up, very much driven by LPs saying, yes, we want ESG. So all of you have to really take on board ESG. I think the GLI, it's still building up. I mean, you can see all the statistics. We've got IFC pushing it up. We've got the Australian DFAT pushing it up. So we have DFIs really leading the charge. I think that's the first point I would make. And if you're in an economy like Myanmar or in emerging countries, you probably would see most of the funds would come from DFIs. So that leads it. Commercial capital tend to be kind of like one of the last, because they were far slower in adopting ESG. So for them to come on board with GLI, let's see the numbers. Does it make sense? And if we can even get a woman on the investment committee, that's already a big plus. So that's the first point that I would make. I think in terms of moving the needle on GLI, really it's for me, it's an education and awareness challenge. And for us, when we're doing it, we never set out, as I said, to be GLI. But when when they look at us and say, oh, many of your people are women, so you should be a GLI fund. But my question is, does it really make a difference to be called a GLI fund? I can adopt every sort of gender lens investing approach. It's good practice. It's good to have. And if we think about ESG, right? ESG basically as the social, very much the area that I'm in, Myanmar, very often the women are the last ones to actually get the benefits. So a very simple approach, which you guys have all learned, is how do you incorporate ESG? So how do you incorporate GLI? It could simply be making sure that you pay people gender parity in pay. You give women equal opportunities. You have sexual harassment policies so that women feel safer. For me, that is, if you want to put it, sort of integration of ESG and gender. So that's how I see moving the needle. Over to you, Evie.
Thank you. Thank you, Genevieve. I was just going to piggyback off Amy's comment in terms of or your questions to Amy about aligning LPs. Ours wasn't necessarily aligning LPs' questions when they were looking at the fund and doing their due diligence. It was more once they were in the fund and our impact reporting. So our data on gender is kind of a given based on our investment thesis, and we only invest in women-led companies. But when it came to further layers of impact reporting, not a challenge, but the work we did to align LPs' questions was around our reporting as opposed to during due diligence. During due diligence, we were quite happy to be flexible with different questions. We weren't necessarily aligning them. The questions didn't necessarily come in at the same time. But we have done work to align LPs' interests and requirements as it comes to impact reporting once they're in the fund. And we're now in a really good cadence. There are only 2 LPs that we have to do specific personalized reporting, and the rest are happy with the kind of condensed reporting that we've done across the portfolio. And that satisfies the majority of LPs.
Thanks, Evie, and thanks everyone for your responses. And with that, I'll bring our panel to a close. Thank you so much for the time and insights that you all shared today. Absolutely delighted to have had the opportunity to moderate this session, and really thank you. Grateful for your time today here.